Hello, everyone, and thank you for joining me today. I'm excited to share with you one of my favorite market tools, the Nasdaq Composite Advanced and Decline Indicator, ADVQ and DECLQ. I've been using this indicator for over 15 years in my day trading of NQ and QQQ. Over the years, I've also taught this approach to thousands of students across Hong Kong, Japan, and Europe. It's simple, powerful, and still highly relevant, even in today's mega cap-driven market. Let's dive in and get started. Market breadth. Well, let's see the definition of market breadth. Market breadth is a technical analysis concept that measures the overall direction and strength of the markets by analyzing the number of advancing versus declining stocks within an index of exchange. It helps traders and analysts assess whether a market move is being supported by a broad base of stock, that's a strong breadth, or just a few large cap stocks with breadth. Common market breadth indicator and examples. Advance and decline line, represented by this symbol. Up volume, down volume, represented by this symbol. New York Stock Exchange tick, by this one. New high and new low, represented by these symbols. So, why market breadth matters? It confirms or contradicts price trend. If S&P 500 is rising, but the breadth is weak, that means few stocks advancing compared to declining. The rally may not be sustainable. And this is also called divergence. That is when S&P or NQ's price is going up, but the breadth is weakened, going down. This is called the divergence, and it is a warning signal. Why breadth becomes less useful sometimes? Market cap weighting. Indices like S&P 500 and Nasdaq 100 are not equally weighted. A few mega cap stocks can dominate price movement. Weak breadth and strong index. If only those top 5 or 7 big names are rising, this index can surge even if 70% of stocks are down. Breadth divergence is common. In this structure, breadth divergence no longer signals reversal as reliable as in the past. How traders adjust today. Breadth tells us how healthy or fragile the rally is, not whether to trade long or short right now. Breadth is no longer a timing tool for NQ and ES, but is still a contextual risk gauge. It can help you spot when the rally is top-heavy and due for rotation, avoid getting trapped when internals are deteriorating under the surface. Nasdaq breadth indicator. Nasdaq AD line, Nasdaq up volume, Nasdaq down volume, Nasdaq tick. My preference. Nasdaq composite breadth is ADVQ divided by DECLQ. I call it AD ratio for past 18 years. Breadth through ADVQ divided by DECLQ. It covers 3,000 to 4,000 Nasdaq stock. It's really a truly broad participation indicator. Equal count, not market cap weighted. So whether the average stock is rising. If ADVQ divided by DECLQ, I call it the AD ratio. If this AD ratio is high, like greater than 2 or even 3, 2, it means the advancing stock is doubling the declining stock. So it is a very bullish pressure. Less distorted by mega cap moves. More honest market health gauge. ADVQ divided by DECLQ, I call it AD ratios. This helps me judge whether overall market sentiment supports the NQ move. Here is how I use ADVQ for NQ futures or QQQ trading for day trade but same logic can expand it to swing trade. AD interpretation. AD greater than 2, that is 2.1, 2.5, 3, even up to 6 is very bullish. Once AD is larger than 2, it makes no difference because AD greater than 2 is very bullish already. And even if it's greater than 6, it's still very bullish. We'll look for long entry using other tools at your preference. Bollinger Band, VWAP, EMA, MACD, etc. for the uptrend. When AD is 3 and then it fall down to 2, it does not mean market will fall. It probably is a bit pullback, it's still bullish, and we always look for long. Once AD fall below 2, for example, it drops from 2.5 down to 1.8, then market may fall. And use tools to trade the market. Well, tools, I mean, you can use whatever tools you use to gauge the trend. But we look for downtrend. This is general interpretation. Later, I will go through more details. When AD is between 1.2 to 1.9, it's still bullish, but not as bullish as is greater than 2. Now, this is most important. When AD is at 0.9 to 1.1, it is very tight range and choppy. You can imagine when the advancing stock and the declining stock is almost the same. No buying pressure, no selling pressure. So the best is to avoid trading. This edge, knowing market is choppy and range, can save trader loss of capitals and avoid many traps. We did not backtest it for 15 years. Real time using it for 15 years. This helps us a lot, you know. Many losses happened in tight range and choppy market. So we use this AD and it really did helps a lot. AD less than 0.8, that means down from 1, the equal percentage, is bearish. Please note, besides AD greater than 2, very bullish, all other AD range 1.2 to 1.9, 0.9 to 1.1, and less than 0.8, as I say, is bearish. They are not static. It will continue to move as stock price go up and down. So we'll continue calculating it. To be specific, we need to monitor for day trade. I use 5 minutes interval. That is AD if is from 0.6 bearish. But if it moves to 0.8, that means it's going up. So despite AD 0.8 is bearish, market may still go up. So use any other trading tools to confirm the up movement. Another example, if AD is from 1.9 down to 1.2, even is still in bullish range, but the price may go down as AD is falling. As I said, you know, it is not static. If price and AD confirm, this is the best scenario. That gives traders high confidence to long or short NQ. Like example, if NQ has been up 20 points and AD at 1.3, later the NQ price up 30 points and AD also go up to 1.8. So there's when prices continue rising, AD continue rising, it's a confirmation, and then we can expect the uptrend has a high probability of continuing its up movement. If price and AD diverge, then traders should follow price, but take profit fast or use a trailing stop because AD is not confirming, it's a divergence, and it may lead to price reversal, but no one knows when the price reversal will happen. So we follow price. So this solves the problem of divergence. Example, NQ down 15 points. Later, it down more. It down 25 points. When it down 15 points, AD is at 0.6. But when NQ continued down 25 points, but AD went up, this is what we call divergence. Use your trading kit to short NQ because we are trading NQ. We still prefer short. Always follow price, but use smaller contract size and take profit fast. Then continue to monitor the price and the AD if needed. Let me repeat this. So when NQ is from here, but the price is down, but AD here is going up, this is a divergence. There's many ways to trade divergence, but my way is I only take serious about the price because this is what we are trading. We'll look for short, but we'll take profit fast. Okay, either you use moving average, moving down, but once it's not sloping down, like once it flat, immediately take profit because AD is moving up its divergence. No one can predict when the divergence may happen, so we just take the safe profit. One important point: avoid using AD for the first 15 minutes and the last 15 minutes of the US section. Below are a few real examples happened in recent days. I focus using AD greater than 2, very bullish, as it is most powerful. It's big uptrend, and we use in real time for over 15 years. And the winning ratio is almost 80%. We keep record every day for the past 15 years. Well, this is the AD. I use numbers, and I generated this from TradeStation. You can do it in any other way. This is year 2025, May the 5th. This is what this column is all about. And this is US Central Time, 8:50. Market start at 8:30. I avoid the first 15 minutes or 20 minutes. This is ES. It's down 43 points compared to yesterday. NQ is down 150 points, and the AD is 0.49. This looks normal because AD 0.449 below 1, below 0.8 is bearish. So you use other tools to trade, but while I will monitor the AD every 5 minutes, you can see how it can affect NQ or ES, but I'll focus in NQ here. Every 5 minutes, you can see here is 0.5 already. That means despite AD is bearish, but it's going up. And this is 0.6, it's going up. So when the AD goes up, the NQs is going up too. It's from down 161 up to down only 110. I will not look at the second decimal. I will only look at 0.5, 0.4, and 0.6, 0.7 to make trading more simple. AD continued to move up from 0.7, 0.8, so as the NQ is going up. So once this from 0.8 move down to 0.7, the NQ drops again. So you use your own tools, to You use your own tools to trade NQ, but I will monitor with my AD. In this way, I will look for long or look for short. You can use it as a double confirmation because there's no divergence. What I try to say is, if you just pick one number, AD 0.8 is bearish because the declining stock is more than the advancing stock. But as I said, the AD is not static. So as long as it's moving up from 0.4 to 0.8, the market is also going up. Now here, you can see it's from 0.8, but it's moving down to 0.7, 0.8, 0.9. This is up. So NQ also go up from down 61 points to only down 38 points. 0.9, it cannot go up to 1 or 1.1, 1.2. Then after a while, it dropped to 0.8, 0.7, and 0.5. So you can see NQ instead of down 30 points here, only down 15 points because it's at the high of today, the AD. From the down 15 points to down 130 points. Of course, I can just using AD to trade NQ, but adding your own tools, EMA, Bollinger Band, or whatever, or VWAP, anchor VWAP, you can have a more precise entry. And this is why I use ratio. It's more easy to see. It's ADVQ divided by DECLQ. Some of my students try to use ADVQ minus DECLQ, and then what they get is not a ratio, it's a number. And then it will make things very confusing for them. So they give it up and go back to what I taught them using ratio. This is another example. You see 2025, May 27. Today, it starts with a bullish tone. AD is greater than 2. When AD is greater than 2, I'll just go look for long. I will not pay too much attention whether it's from 2, it go to 3, or even go to 4. Sometimes it did go to 6, not quite often. And then from 3, it dropped down to 2. And then from 2.7 to 2.5, all this doesn't matter. As long as AD is greater than 2, it's all bullish. NQ from down 18 points to closing up 193 points. It doesn't mean that when we saw AD, greater than 2, we'll long immediately. Of course, some students will do it. I would prefer to use another tools or my own indicator, or you can use a moving average or MACD, to further confirm that it's an uptrend. But for me, I look at AD and my own indicators. I can trade this very well already. And the best part is, if you use other tools, you can find the pullback. Okay, let's say if the EMA is going up, if there's a pullback or it go up again, this one we will not trade. Or if it goes up, maybe it's go this way. So we'll trade this part. Any short, we'll totally ignore. When AD is greater than 2, we will never do any short. And then this part we long, this part we ignore it, and then we long this part. And this will even give you a greater result, bigger profit. All right, one more example. Year 2025, June the 3rd. AD start with 1.19. Now remember, anything between 0.09 to 1.1 or 1.2 is tight range. So you can see here the NQ is very choppy, and it start with up 45 points and ended with up 56 points. Very slightly movement, but you can see once AD go up out of this tight range, go to 1.4, 1.5, then NQ move up. Here it touched 2, but cannot maintain, but still is very bullish. You can see it continue to move up. Then it's all AD above 2. So from this point, I'm more happy to trade all long. Highest it go up to 200 something, and then it stayed with 200 something. It go down here very big. Then it's a good, when it's down, something might happen or whatever. The AD still maintain at 2. It's a good, it's just a good place for me to long. And this will be sold in the trend line, like it's going up, and then from 200, let's say, it down a bit, and then it drop fast, but then it'll slowly go up. So I will only trade the long and ignore the short, trade the long again. So this is the power of the AD greater than 2. I just give out a few examples, and that wraps up what I want to share with you today. So thank you again for watching. If you found this helpful, feel free to reach out, and I'm happy to connect or go deeper in future sections. Until next time, trade well and stay focused.